Well, the markets are holding with a cut-off around 130 points. Today, in fact, we're seeing the call writers, they are getting back into the game. So you pull up the 11,000 call. Out there, we're seeing the total open interest has jumped up by nearly around 19 lakh shares. But you come a little lower to around the 10,900 call. Now, out there as well, we've seen nearly around 18 lakh shares getting added. So between the 10,900 call as well as the 11,000 call, there's nearly around 39 lakh shares that have got traded. That's telling you that the call writers, they're going to put in a bit of a fight. The bears are going to make it difficult for the bulls to take this market beyond that 10,950 to around 11,000 mark. But more importantly, I think the action at the 10,000 put is very 10,900 put actually. That was seeing some action in the last few days. So you're getting a sense that a base was getting built at around the 10,900 put. Now that has started unwinding, telling you that some of those bulls that were writing that strike and eating to the premium, let's get the 10,900 put up for you. And they are packing their bags and they're moving out because now they're getting a little jittery given that the markets have moved lower. So keep an eye out on the 10,900 put. I would say that's the most important one today because that shed close to around 10 lakh shares as we speak. So keep an eye out on that front. But let's move straight to a CNBC TV 18 exclusive then. Sources tell us here that the insurance regulator IRDA is set to grant R1 or first level approval for India Bulls life insurance arm. Yash Jain joins us in the studio to fill us in on all those details. Yes, tell us.
So, well, Nigel, it's almost after 6 long years that a company is getting the license as far as life insurance business approval is concerned. And this comes from Indiabulls Integrated Services. What we're given to understand from our sources is that the company, which is Indiabulls Integrated Services, has filed its papers and is likely to get the first level approval or R1 from the insurance regulator in today's board meeting. Now, essentially, just to put things in context, there are 3 approvals which are required before you can start your business operations. The first one, which is the most important one, R1, is supposed to come in today for Indiabulls Integrated Services. What we're given to understand is that they are likely to receive the second level approval in the February board meeting and somewhere start their business operations by Jan 2019. Now, as far as the capital is concerned, what we're given to understand from our sources is that Indiabulls Integrated is likely to infuse an initial capital of 100 crore, which is the mandatory amount required, and also keep a reserve of about 1,200 crore as far as further funding to the life insurance business is concerned. And interestingly, it's not just the life insurance, but the company is also, planning to enter the general insurance space. We are given to understand that they are likely to file their papers for the general insurance business within the next 2 months. So essentially, in the February board meeting, IRDA board meeting, that general insurance proposal is also likely to be taken up. But for today, it's the life insurance first level approval which is supposed to come in.
Okay, the approval will come in. You're expecting the approval today?
Yes.
Okay. Well, that will be looked at with great interest by the market, more because it states, it makes a statement on the financial position of the group. Yeah. So more than, anticipating another insurance company, which will take a long time to start running, even after getting the permissions, you have a lot to set up. I think for the market, it will be more in terms of the problems of the group probably are behind them. Okay, we'll look at that with interest. Already that stock is, looking very good at this point in time, 4% higher. With that, let's shift focus to the global markets and to the fact that India has caught the global flu. Until now, we seem to be outperforming, but not today. Shane Oliver of AMP Capital Investors joins us on the phone line to give us a sense of this global meltdown. I mean, it may be a strong word just yet, and to what extent the emerging markets in India may catch this flu. Thank you very much, Shane, for joining us. Do you think this, fall in global markets will go some distance? We've already seen a 10% fall in Wall Street indices. More to go?
Probably, I would say, yes, there is more to go. If you look at the highs in global indices, MSCI Global and also the US share market, the highs were in September. From that high point, we've come down about 15%. And my sense is that investor sentiment is not washed out enough yet. We haven't seen the sort of signs that you often see at market bottoms. And there's too many uncertainties around, whether it's about trade, growth, the US central bank, the Fed, China or whatever, to suggest that we've seen the bottom here. So my feeling is we'll probably come down another 5% or so into early next year. That will give us roughly 20% from the high point, which was September, to the low point, and will make it fairly similar to what we saw back in 2011 or 2015-16.
Well, that's Shane, that's about the US markets, right? You're talking about a 20% correction from the top. Where does India fit in, and what happens to the emerging markets? And from the emerging market basket, where does India, fit in terms of ranking?
Well, just to put it in context, emerging markets have been under pressure for much of this year, since early this year, in fact, and they've already had a 20% decline, 21%, in fact, if you look at the Morgan Stanley or MSCI Emerging Markets Index. And the index there looks to have bottomed in October, much like the Indian share market. And even though those markets have come down today, whether it's India, emerging markets, China, what have you, they've all come down, they seem to be holding up much better than the US share market. If you look at the US share market through December is down almost 11%. Whereas emerging markets haven't had anywhere near that sort of fall. Now, I think that's because the emerging markets already got hit earlier this year, and so consequently, the adjustment has largely already occurred, and therefore, and they're cheap. The emerging market indices are trading on something like 10 times, 11 times forward earnings, whereas the US was trading on something like 16 times. It's probably come down now to about 15 times. So you could argue the emerging markets are quite cheap. When it comes to India, I think India's got a few things in its favour. It's a somewhat more closed economy. It's not as dependent on exports and imports as is many other emerging market countries. It's an importer of oil. It's an importer of oil, so the decline in the oil price is actually very good news for India. And growth in India is world-beating. It's even stronger than China. So there's all sorts of issues in India like there is everywhere else, but in the great scheme of things, it doesn't look too bad, which is why, in a relative sense, it's been an outperformer. It's not as exposed to these sorts of problems globally that some other emerging markets are, and I think its valuation isn't as rich as the US market, and the US market's now unwinding that overvaluation.
Okay. Any specific thoughts on India in terms of the way in which liquidity has behaved? The US markets are obviously responding to the Fed balance sheet contracting, and India has seen an expansion of the Reserve Bank of India's balance sheet. They have promised to put in 500 billion rupees every month, December, Jan, Feb and March. Obviously, inflation is not a bother with crude having crashed. For India, it's a big deal. Do you think that makes India a rank outperformer?
Potentially it does in this context. There are issues with the change in leadership at the central bank, but that seems to have been handled relatively smoothly in the great scheme of things. The inflation, there is a higher rate of inflation in India than elsewhere, but as you point out, the fall in the oil price will cut that. I mean, the oil price has fallen, the West Texas has fallen 40% from its high in October. That's a crash in the oil price, and that's actually horrible if you're an energy producer, but it's fantastic news if you're a user of energy. And of course, India is a net importer. So in that sense, it's actually good for India. It takes pressure off inflation and provides a stimulus to the economy. So I suspect that, notwithstanding things feeling kind of bad today because the share market is down following what happened on Wall Street, and it might come down some more, my suspicion is, or my feeling is, India will outperform.
All right. Thanks so much, Shane, for stopping by. In fact, it appears you're a good luck charm today for the markets. The Hang Seng, if we can get the intraday chart up for the Hang Seng, that's moved into the green. It's sitting with a gain of around 50 points. And our own markets have cut losses by close to 20-25 points. Sustenance of these levels will be rather important because we are doing a bit of a fight back. Let's pull up the Nifty. We were down 135 points when Lata and me started off the show. We've seen a 30-point pullback. Few stocks, Tata Motors has been moving well from yesterday, so keep an eye out on that one. And besides that, Coal India and NTPC, both those two PSUs as well, moving higher in the last few minutes. Yeah.
The real economy is giving some negative signals. First, we saw the auto decline in the month of November and early December, and now we are beginning to see aviation data indicating a slowdown. that data should come up for you yet again. It's clearly looking like there is a bit of a slowdown over there as well. Aviation data will come up for you in just a bit. Not looking too good, slowdown. Growth, I think, down to 11%.
Yeah, the domestic air passenger traffic growth is at a 51-month low. That's what our Tika team just put out. So keep an eye out on that front. Just wondering, Lata, but with crude prices falling, the ATF prices as well will move lower. So
you should have actually expected more, I would have thought.
Yeah, but maybe that could come about as well. But clearly, that data point doesn't look good. Domestic air passenger traffic growth at a 51-month low, not looking good at all. We'll try to pull in an analyst and maybe get a reaction on that front as well. But for the time being, let's tell you what's the trade on the index. Ashwini Gujral and Prakash Kaba, both of them are with us. Good day, gentlemen. Thanks so much for joining in. Well, we're pulling back from the low point of the day. Ashwini, what's the trade now? We were down 135 points. Now we're still down 105 points. Is a pullback on the cards, or will you use this pullback to short into the index?
Within a day, I am not aware, what is a pullback? Is it coming off or going up?
At the moment, it's going up. Okay.
So my sense is that a lot of it is priced in whatever good news you had, etc. Now, globally, things are supposed to pull back after a 10% decline. Here, we made several attempts at 11,000. They have failed, and market has come off sharply from those levels. So the idea should be that as we go towards 11,000 again, people should take their profits off and probably even go short at current levels, because you got enough good news and still 11,000 could not get taken out. So that way the sense is that market may be choppy, but overall we need to go lower. You need more than one full day of pullback, at least the 20-day moving average, before fresh strong buying comes back. So I'm interested in selling this pullback rather than buying. So Canfin Homes is a sell with a stop of 285, target of 270. UPL is a sell with a stop of 750, target of 725. And Himmat Sinka is a buy with a stop of 214, target of 231.
Okay, fair point. Prakash, good afternoon to you. What are you doing in terms of trades, buys or sells?
Sells. Good afternoon to you. Nifty looks like it's broken crucial support. So I have two sells here. Ashok Leyland is a sell. Good chances it can see a slide to around 100 zones, stop above 106. And Canara Bank also is looking weak a bit. Possible target on the downside 260, stop above 271.
All right, let's get the disclosures in then. Ashwini, any trades that you're executing?
See, we have short positions on the Bank Nifty, which we plan to carry over the next couple of weeks.
Okay. Prakash?
No trades.
Okay. All right. Thank you very much, Prakash and Ashwini. We'll touch base with you in an hour to check how markets are moving. At the moment, weakness persists. That little bit of a pullback also is getting pulled back the other way around now.